Yes, we've been talking about governance. We have had just wonderful governance. We just reduced our state income tax from 4.6% to 2.5%. And we did it a year earlier than what they thought because we had such a great big surplus. So this is governance where people are actually watching the budget and running the state with the idea that we want to expand it and taking care of business. A lot of these other places just don't seem to have that about endangered cities, but I'm beginning to think that they're zombies. I want to get your opinion on it as to where you thought that we're heading in the country with that. Because there's a lot of talk about San Francisco. San Francisco is just obviously being beaten up in the news, and they talk about the quality of life. They talk about crime. They talk about homelessness. But what about the fiscal part of this, the financial part about it? Because I'm hearing that really have states that may very well become bankrupt.
Yeah, we can talk about that. The whole pension thing really ties into that. And that's something that, I've been writing about that forever, expecting pension funds to blow up. They haven't yet. But the fact that we just had the worst bear market in bonds in history means that a lot of these pension funds are even deeper underwater than they were. So, yeah.
Yeah, of course. And a lot of these states have made, they didn't pay well, but they gave pension benefits and said, well, this is the trade-off for it. And a lot of them, of course, I think they're blowing up as well, because we're talking about New Jersey, Connecticut, Massachusetts, certainly Illinois, and Hawaii as being on watch for bankruptcy. Can you imagine bankruptcy? Can you imagine Illinois going bankrupt?
Well, there's a question about whether a state can legally go bankrupt. There's not really a mechanism for that. I mean, if they default on, for instance, their bonds or their pension funds, that's a functional default or a functional bankruptcy. I don't know what they'll call it or how to work out in the courts, but it's possible for a state to default, but possibly not to flat out declare bankruptcy. So, that's an interesting question for the decade ahead. I think we'll have to work it out. We'll have to find out what that means.
Well, they have so many benefits. There's so many people who are really dependent on government. What happens when the tax revenues don't come in? Now we're here in Arizona, and we have, when people talk about moving, they always talk about going to Florida or going to Texas. But Arizona, where we're at in Phoenix, I mean, the growth here is just phenomenal. We've got the Taiwan semiconductor plant that's being built. It's a $50 billion plant. We've got Intel building. We've just had Amcor open up. They just announced another $2 billion plant, and jobs are coming like crazy. But these people are coming from California.
Oh yeah, of course. But that presents you with a separate problem. Your finances are okay, but your water is running. In California, the original water distribution law was put into place before Arizona was even really a thing. So you guys don't have a high priority, as I understand it. So California can refuse to give up any of its water, and Arizona can go completely dry, and that's legal within the current framework. So that'll be an interesting thing to see.
That would be an interesting thing.
Yeah.
Fortunately, we have this Central Arizona project, which pulls water from the Colorado River. That's probably what you're talking about. So I think that's very true for a lot of the cities. Phoenix itself, though, we're blessed here with two watersheds. So not only do we have the Rocky Mountains coming through here, so we have the western watershed coming up, but we also have the Mogollon Rim, which is the White Mountains, and that's from the southern monsoons. So that prehistory, going into the prehistoric, there's both of those watersheds have never been in drought at the same time. So central Phoenix, central Arizona is blessed.
That's good to know, because we have two sons. And my wife and I are both looking at, all right, what if we bought them a house? Where would we buy it for? And stuff like that. And we were looking at Arizona, but then the whole drought thing kind of threw me a little bit, because I don't want to buy our kids a house and then have the water run out. But if the Phoenix area isn't subject to that, it can go back on the list.
Amazon came here, John, and put their warehouse. And one of the reasons they took Maricopa County was that their warehouse workers, not a perfectly skilled, mathematician or working in their computers, just someone that's working in the warehouse. They could work for Amazon. They could buy a house, send their kids to school, and live in a crime-free neighborhood, and still be a warehouse worker.
That's a good selling point.
But you and I used to grow up like that. That used to be pretty common.
Mm-hmm.
I mean,
it did.
Yeah. And so personally, I think that's one of the reasons that we have such great neighborhoods here. But I want to segue this over because my concern is that, my business is basically investors. So, I didn't start out that way, it's up this way. So 70% of my business is investors. And, my investors are coming from like Silicon Valley. I'm getting them from Portland. I'm getting them from Chicago and a lot of people, Seattle. And they're leaving because of what's going on in the States. So we talked about some, possible states that are in financial trouble themselves, and people are leaving. They're getting taxed to death and they're leaving. And, these people that are leaving, John, that's the tax base. What happens when they've gone?
Well, you're describing the future of Illinois and California and New York for sure. And I don't know if they have an answer for it. So I'll tell you what, Michael, this time I'll put my tinfoil hat on if you want, and talk about what's happening to a lot of these states as something that is purposeful instead of just via incompetency, if you'd like, because it's seeming more and more like that to me. The whole Soros DA make camping on the streets and shoplifting legal. How can anybody think that's going to have a good outcome? So the only other explanation is that they're getting exactly the outcome they want. They're destroying American civilization. So.
Correct.
Yeah, so we can go there if you want.
Yes, let's go, because I wanted to talk about the zombies and I think that that's exactly what's going on too. I think there's a big plan in place because no one would want to do that. Who would want to live like that? They passed the law that says that you can use drugs, any drug. You can use heroin, you can use cocaine. And if you get caught on the street with 2 grams of cocaine, it's a parking ticket. It costs you $100. You don't go to jail. You don't get into rehab. It's just perfectly illegal. So who are they attracting?
Yeah, that's an interesting one because, as a mostly libertarian, I like the idea of your body, your choice. And the question is, what happens to a civilization that tries that? And some places have tried it. And, there's a lot of things that go with it, like Switzerland and where else? The Netherlands, I guess.
Netherlands, of course. Yeah.
And it's, it's worked for them, but it takes place in the context of a lot of expectations at the same time. You're not allowed to be sleeping on the streets and doing drugs. They sweep you up and they put you in a place where you get treatment and you're taken off drugs. And, you're allowed to go forward and continue with drugs, but you have to do it, without being somebody that ends up as a derelict on the street or in a mental institution or something like that. So there's the problem with, the American version of this is that it's all rights and no responsibilities.
I would really like to get your opinion and your thoughts because something is going on in America. What do you think is going on? Now, we oftentimes talk about the economy, but what about society itself? And what about the plans in the future? I mean, we have some things that are just not right. What's your thoughts, John?
Yeah, I for the longest time, I attributed it to silly ideology and general incompetence, what's happening in a lot of states right now in the U.S. But I'm coming around to the kind of tinfoil hat idea that this is purposeful, that there is an active attempt to destroy American civilization. Because, how else do you explain making shoplifting and camping on the streets legal? That can't possibly lead to anything but chaos, and yet we're doing it. And then at the same time, you've got these, your listeners probably have heard the term Soros DA out there. Yeah. And you've got this process going on. George Soros is a billionaire who intervenes in different countries' political systems for his own ends that they're not always clear. But what he's decided to do in the U.S. is, instead of trying to elect senators and governors and people like that, they're throwing lots of money at lower races on the ballot, like district attorneys. And so they're coming in and they're giving a lot of money to the most extreme left-wing district attorney, who then gets elected and who then starts to gut the system of jurisprudence in the state, where they'll just redline a bunch of different crimes and say, we're not going to prosecute those. And a lot of those include things like home invasion and shoplifting, large amounts of money worth of stuff, things like that. And so it basically is a green light for whole categories of criminals to do whatever they want. Carjacking, I think, is on the list of a lot of these guys. And so you get the quality of life just plummeting in these places where, you can't go into a store without seeing shoplifters, and everything's locked down in the stores. And downtown, which used to be nice, is now a gigantic homeless encampment where people are shooting up and going to the bathroom right there on the street. That's very destructive. You can't have a city that exists that way for very long without having a mass exodus. Now, the reason that, I'm cautiously optimistic is that people can leave. We can vote with our feet in the US because these are not national laws we're talking about. They only apply to Chicago or only to Portland or San Francisco. So people can just pick up and leave. And that's what's happening in droves. Hundreds of thousands of people every year are moving from California, Illinois, New York, and a handful of other badly run states to places like where you are in Arizona or Florida or Texas. And so we're seeing this huge shift in population, which leads to a huge shift in political power and might fix the problems that we're talking about. But only if the people who move out of, say, California don't take their California politics with them. If they show up in Texas and start voting the same way they did in California, then they'll just turn Texas into another version of California. So we have to see. Hopefully it's the reasonable people who are leaving these horribly run states. Once they're in their homes, they'll vote in a reasonable way and keep those states the way they were when they moved in. So we'll see. That's not guaranteed, but I think there's a decent chance that enough of the people leaving the terribly run states are reasonable enough to want to preserve what they find when they go to their new home. So we'll see, but I think there's a chance that this works out.
Well, we're seeing here in Phoenix, where the people that are coming here are highly skilled. We're seeing entrepreneurs and professionals. We have a lot of people coming from Silicon Valley. It's so expensive to do business in Silicon Valley that they're actually doing startups here in the East Valley of Maricopa County, and they're going to be quite a few. I mean, it's become like the number 2. It's the new Silicon Valley, so they say. My concern, of course, is that they're going to leave a vacuum behind them. And a lot of these states and cities are not equipped to handle this, so that when you start losing all your expertise, it's like a brain drain.
And your tax base just shrinks down to nothing. That's happening in Illinois in a dramatic way. So then we find out if it's possible for a state to go bankrupt. There doesn't seem to be a legal mechanism for that, but it is possible for, say, a state pension fund to default on its obligations. And it's possible for a state to be unable to pay the interest on its bonds, for instance. So those things are, mathematically possible, but it's not clear how it works legally. But that's what we're going to find out pretty soon, because some of these states are clearly bankruptcy candidates. And I think Illinois is the first. They're headed that way really quickly. So they're going to be kind of blazing the trail for the other incredibly badly run states about how you resolve this kind of thing. Because, for instance, the pension funds in especially New York and California and Illinois, they're really long established, which means they've had decades in which to make promises that they were never going to be able to keep and just kick it into the future. Mm-hmm. Well, now the baby boomer cops and teachers are retiring. Those pension funds have to make good on their promises, and there was nowhere near enough money to cover the obligations of the coming decade. So what's going to happen? Well, we'll find out. And we really can't know for sure, but it's going to be something resembling bankruptcy. And that's going to involve cutting pensions way back. So a lot of the people in those cities and states are going to find out they're not nearly as well off as they thought they were, because their pension is now half of what it once was. Especially the big cities are going to have to cut way back on city services. So not only are the pensioners in these cities going to be impoverished, but the people who are still working are going to find out their lives are much harder than they thought. Crime is going to go up, the trash isn't going to be picked up, the cops aren't going to come when you call. So all of a sudden, these things that we think of as birthrights as Americans are going to go away. And then they're going to find out they're living in a third world country. So that will accelerate the exodus. The exodus will accelerate. So I think that's going to be one of the big stories of the coming decade. Probably what happens when this really spreads, because we're talking multiple trillions of dollars. If it's California, New York, and Illinois, the federal government is going to have to step in and bail these guys out. So that's another several $trillion that's going to have to be tossed at dysfunctional entities by the federal government that they have to borrow in order to fund, which means their debt will go up, which means their interest costs will go up, which means their debt will go up even further. And, we're already at the point with the federal government where just debt costs alone on the federal debt is $1 trillion a year. And that has to be borrowed, which makes future debt costs even higher, which means something very important in all of this. And now we go back to finance. And once the federal debt and the interest costs on that debt reaches a certain point, the federal government can never again raise interest rates because everybody will be able to see what that does to their interest costs, and that it will just blow up the budget. So we're going to hit a point where, inflation starts to pick back up from all these bailouts. It'll be the, pandemic on steroids. And we have to bail out all the bankrupt states. That will cause inflation again, which the federal government would normally combat with tighter money, but they can never again tighten money because that will blow their interest costs sky high and bankrupt the federal government, not just some state governments. And people will recognize that inflation is here. It cannot be combated by any monetary tools that we used to have that we don't have anymore. And so they'll sell the dollar. And so we'll have a currency crisis. And that's the final stage of this process, because then we have to have the currency reset, where we do away with the fiat currency experiment of the last 70 years. And it's the last 50 years, 1971 to today, so 50 some years. And we start with a major devaluation, and then we have to go to some kind of sound money system. So that's the real end point of all of this, is we impoverish everybody who trusted the federal government by devaluing the currency in a serious way, 60, 70% from here. And then we start in on a gold standard or whatever, whatever kind of sound money idea that people decide to implement at that time. And you end up with a massively impoverished population who's not going to take that lying down. So then you get the civil unrest and extreme political unrest that comes from a currency crisis. At the same time, you've enriched the gold bugs out there, so there's going to be a new class of capital allocators when gold is $10,000 an ounce and the dollar is, 1/5 of its current value. So lots of people's bank accounts will just evaporate. A lot of other people's stacks of gold and silver will suddenly become life-changingly more valuable, and we're going to have to navigate our way through that too. So I totally want to be on the side of the stackers when that happens.
Well, isn't that their policy response, John? Is as soon as they have a problem, they just throw money at it.
That's what you do in a fiat currency system because you have an unlimited credit card.
And of course, they'll just keep throwing money at it, and our debt goes up. You start having to pay more on your debt. Interest rates go up. But then, as you're saying, we get to a point where you can't pay anymore, so we have to keep the interest rates down, which then makes your currency worth less. And of course, oil then is an international commodity. Wheat's an international commodity. Copper, everything's going to cost us more, and it's going to drive inflation. Is that the scenario we're looking at here?
The value of the dollar will go down, which manifests as the prices of everything going up. Now, there's an interesting juxtaposition here, because if you look at oil priced in dollars, it's on average gone up most years, and it's much higher than it was back in, say, the 1970s. Priced in dollars. But if you look at it priced in gold, it hasn't changed. Oil as it relates to gold is the same as it was 50 years ago, which means that the people who own precious metals will see their purchasing power protected. They won't be affected by inflation, but the people who hold fiat currencies will be, impoverished and maybe bankrupted by it. So we're dividing society into two groups here. And, it's always ugly when you do that, but you definitely want to be on the favored side of whatever's coming next. And that's basically the intellectual challenge. How do you put yourself on the right side of history as it regards the coming gigantic financial crisis? And there are ways to do that. They're on my Substack newsletter. That's basically what we explore. It's actionable stuff about how you set yourself up so you're ready, and you don't just protect yourself, but you actually profit from the stuff that's coming. And it's not super complicated, but I think it's something that the average person hasn't thought about enough yet to really understand. So I think we'll go through a process of educating ourselves over the next decade as this all plays out. And hopefully we end up with a lot of gold bug sound money people and libertarian-ish. So we might have the kind of a system at the end of this where a Ron Paul type politician could actually be elected and have a chance to kind of preserve the freedoms that we fought so hard for.
Well, these are all great points, John. I think what we're talking about is that we have a shift from financials to tangibles, because I've seen a lot of reports that tangibles, including gold, silver, but also forest products and agriculture and real products, are so far indexed to financials. Financials so far outweigh them so far as people's holdings. So if we switch from have high inflation and starts denigrating all your stock holdings, it's certainly going to destroy your bond holdings. We're going to be shifting wealth from one class of people to another class of people. Is that what you're talking about?
Yeah. Inflation, as it's evolving, favors things that can't be created out of thin air by the government. And it impairs things that government can just make more of. So the last thing that you want to own, once government is put in a position where it has to start bailing out badly run states and cities, is government bonds. You do not want to own long-term treasury bonds at that point, because those kinds of bonds derive their value from the currency that they're paying you in interest. So if the value of the currency is going to go down because the government's bailing out anybody in sight with borrowed money, you don't want to own instruments that will be crushed in that process. And that's what happens to government bonds. So that's one part of the thought process. You look at what's going to be just destroyed by this thing, and you get out of those things as quickly as possible.
Well, can you imagine the problems that's going to be, John? Well, people pack their 401ks with all kinds of stocks. And of course, the average financial planner tells you 40-60, 60% stocks, 40% bonds, and have 40% of your portfolio get wiped out, which has been what's happening right now. I mean, the banks are in terrible trouble because they have all these reserves in U.S. Treasuries that have now lost 30, 40, 50% of their value. Oh my gosh, that's so what should we do for the next 5 years here, John?
Well, for the next 5 years, this starts to play out. I really think in 2024, you could see a lot of the things we're talking about already start to happen, where we get a deep recession, which I think is that's a first half of the year story where, real estate just tanks and equities that are wildly overvalued go down, and the labor markets stop looking halfway decent. People figures out layoffs are coming and layoffs happen. All of that stuff happens. The economy slows down dramatically. That leads to an equities bear market. So then you get all these people who've been told by the government and by the experts that bonds are risk-free and large cap stocks are almost risk-free. And they lose both ways, So that's where you get the civil unrest that's coming, because people were told that zero risk was what they got when they have a bank account or when they have a government bond fund. And when that turns out not to be true, then the disillusionment is going to translate into action in the streets.
Yeah, but what happens when all your social programs are diminished because you got to pay the interest on the debt?
Especially at state and local levels, but also at the federal level. Governments won't be able to cover their obligations, and they'll have to cut way back. So you got, people whose stock portfolios and bond portfolios go down. They're not as rich as they thought they were. People whose pensions are cut by, 30% or 40% or 50%, they're absolutely not as rich as they thought they were. And you've got services kind of shriveling up, like things you used to be able to count on aren't happening anymore. So your life gets harder when you get poorer. So there's going to be some serious anger out there when that happens.
So there's going to be, and that is why we're seeing this demographic shift from a lot of the cities that have already experienced this to Florida, Texas, and Arizona. Let me just segue over to, the pension funds in the UK are in the news too. They were forced to buy a lot of their government bonds. And of course, that's the same with Germany and France and the Netherlands. They're buying negative interest rate bonds and have interest rates go up at all. That means that all these reserves and all of their assets that they thought were so secure, they've lost 60, 70%. How can they meet their obligations if you've lost 50 or 60 or 70% of your portfolio?
You can't if you were already underfunded, right? Because that just makes you more underfunded when this happens.
It's a double whammy, John.
And you're right in pointing out that this is not just a U.S. problem. This is the entire fiat currency world. Everybody who has a currency that's not backed by anything, well, all of them are going to be in trouble at once. And see, that's the difference between this crisis and previous crises. We've had financial crises forever. And in the vast majority of them, it's one country screwing up its currency in the context of the sound money world. Everything else was gold backed. Your currency blows up. You have a crisis. You get over it. But this time around, everybody is in the same boat. They've all got currencies that aren't backed by anything. And because those currencies aren't backed by anything, the governments have been able just to create as much new currency as they want to, borrow as much money as they want to, and get away with it. But now we found out what the end game is there. Because when interest rates go up to counter inflation, the interest costs on all that debt go through the roof, and that bankrupts countries. I think one to watch is Japan, because they had their big financial crisis in the 1990s, and ever since they've been borrowing just crazy amounts of money. So the Japanese government now has more debt per capita than any other government in human history. And if their interest rates even go up to the level that the US government pays, the best AAA credit, supposedly, Japan is bankrupt. Their government is paying out more in interest than they're taking in tax revenues. And so they can't ever raise interest rates again, even though the value of the yen is falling. So their currency is falling, but they don't have a tool with which to fix that. And there's no end in sight. They're staring into the abyss, in other words, financially. So where Japan goes, everybody else goes very shortly. And pretty soon it's going to be the whole world in that boat with no way out.
Well, they'll have to default, will they not, John? I mean, doesn't that, they just have to say, whatever you call it, whether you call it a bankruptcy or a restructuring, whatever it is, if you can't pay the debt, you can't pay the debt.
Inflation is a form of default. So when they make the currency less valuable, that means they're paying back less value on their bonds. And that's how they'll do it. That's how they already are doing it. They already made the currency in the US 10% less valuable in 2022. So in effect, they defaulted on 10% of the government's debt. So they're going to keep trying to do that until people won't accept, people won't play that game anymore. They won't accept those dollars at face value. They won't accept those government bonds because they know that they're systematically being defaulted upon. And when that happens, it's game over. So we're close because people already see what happens during a bout of inflation, which most adults now have never lived through that before, because the last serious inflation was the early 1980s.
Yeah, I lived through that, John. I remember that.
Yeah, I do too. But the average, much younger American has no experience with this and hadn't done until 2022. And, they won't put up with it. People just won't accept those terms if that's what the government is offering.
Let's put our thinking cap on and think of what the structure is going to be like. I run a timing model, that, and we run an economic and a timing model. Our model is telling us it's been deadly accurate that we're looking at we're probably in recession now. I think we're going to start seeing major unemployment by the time you start getting into the end of the first quarter, into the second quarter. Do you believe that the Federal Reserve is probably done raising interest rates, or do you think there's another one coming?
I think they're probably done raising interest rates. Although if stocks keep going up, then the Fed might feel obligated to make the point that money is still pretty tight. So they could raise another quarter point one time. I think they probably won't, but it's possible they will. And okay, the thing you need to understand about rates going up dramatically in a short period of time is that even after the Fed stops raising, monetary policy continues to tighten for a long time because all the debt that has to be rolled over has to be rolled over at higher rates. So for instance, in commercial real estate, that's a good example of it now, where a lot of office buildings got put up in the previous decade at much, much lower interest rates than today. But that debt has to be rolled over. And now it's going to be rolled over at 2 or 3 times the interest rate that it was originally financed. And a lot of these office buildings already have kind of low occupancy rates, so they're not making any money. And now if the financing costs go way up, it's going to bankrupt a lot of these guys. Turn bankrupts a lot of the insurance companies and banks and pension funds that own the related paper. So that might be where the crisis really starts. It's commercial real estate, moving on to local and regional banks, moving on to insurance companies and pension funds, and then it all blows up. It's a 2024 story, very possibly.
If I can recap this, so we're looking at a recession coming, probably a fairly severe recession. I think you said it exactly. We see it in my industry at all when these multifamilies and office buildings, if they have to refinance, why they are no longer viable, and they're giving them back to the bank, and the bank doesn't want them. Now you've got $100 billion or $100 million property that you're going to sell for $50 million. That's deflationary. So maybe we have a deflationary event, and then we have a policy event to counteract this deflationary event, and it just explodes the whole whole economy. Is that kind of like what we're thinking of?
Yeah, that's the most reasonable sequence. You have a bunch of bad debt blow up. That's very deflationary. And that deepens what would have been a recession in any event, maybe turns it into something a lot worse than a recession. Federal government has to step in and start bailing out everybody in sight. And we're talking tens of trillions of dollars around the world at that point.
Well, there's 11 trillion in commercial alone that's at risk.
Mhm.
$11 trillion of commercial property.
Yeah.
Here in the United States.
And then there's several thousand local and regional banks, a bunch of insurance companies, already underfunded pension funds, and a whole bunch of people who are invested in these things who can't afford to take the losses. So yeah, it's multi-trillions of dollars that the government will have to borrow or provide guarantees for when this happens. And it could happen pretty quickly. I mean, let a few entities in the commercial real estate space default and declare bankruptcy, and then get everybody speculating about what that does to the banks. And then we're basically there. The banks will tank, they'll have runs on their deposits, and then the government is stepping in and bailing them out. So that can happen in like a long weekend or something.
John, in the little bit of time we have left, can you outline what the average listener should be doing? Let's just give them a short outline. And then you're talking about this in your blog, are you not?
Yeah, I'm at rubino.substack.com. And that's a newsletter that is mostly focused on the actionable part of this story. In other words, what should we be doing about all this? The very general outline of that story is that we should be getting out of financial assets, things that depend on the value of the dollar for their value, and into real assets, like things you've already mentioned, gold and silver, industrial commodities like copper. Uranium is a phenomenal story. All the uranium stocks are already up by about 100% almost across the board in just last year, because uranium is coming back into style. And the government can't make more uranium. It goes up, it needs its fuel, and so it has to be gotten out there in a mine somewhere. There aren't that many mines producing anywhere near enough uranium to cover future demand. So stories like that, look for stories like that. And then if you're adventurous, consider shorting the stock market. I've got some articles on the Substack newsletter about exactly how you would short things. And start by watching the movie The Big Short. That's about people who basically saw that the housing market was going to blow up in the 2000s and placed bets against the big financial entities in that space, and they made life-changing money. Well, that's coming again. Yeah, it's not far from happening again. And so, how do you make 10 times your money if something like that happens? Well, there are ways. Start by stacking gold and silver, have lots of physical precious metals, and then move on into the slightly riskier but slightly more profitable.
Well, John, they can get hold of you at Substack, and you've got actionable items, because a lot of our readers are going to be looking at it going, oh my gosh, I've got to do something. So these are practical things that they can get from you. I certainly thank you so very, very much for coming on today and sharing this with us. It's it's like going to the doctor and the doctor telling you you're sick. No one wants to hear that you're sick, but we need to know what the cure is and how we can get well. And it looks like you're giving us a pathway to get better, or at least avoid this. So it's tumultuous times, but maybe there's a light at the other end you have to pay attention. This is not something that you can be passive about. I think these are all, you have to be active on this. Is that not true?
Well, it helps to be paying attention and to make changes as things go on. But there's a basic portfolio that you could set up in an afternoon, and that if you didn't want to watch it, you wouldn't really have to. You could come back to it 10 years later with a reasonable expectation that it would have done very, very well. So
yeah. Well, if they can get hold of something like that, and by listening to you to change their lives, we'd all be very, very grateful for that. John, thank you so very much for coming on with us today and taking your time. I know it's very valuable. And I hope everybody takes your investment newsletter, and they can get themselves at least on the right path. So thank you, John. I appreciate it so much.
Thanks, Michael.
Bye-bye now.